Hello everyone, welcome back. If you're trading gold this week, then this chart deserves your full attention because we are approaching a very important decision zone. Looking at the 4-hour time frame, gold is still trading inside a broader downtrend. The descending trendline continues to cap the price, showing that sellers are still defending the market. However, despite this bearish pressure, buyers are refusing to give up. The most important area right now is the 3,965 to 3,944 demand zone. This is a strong order block where buyers have stepped in before. As long as gold holds above this support, the possibility of a bullish reversal remains alive. At the moment, price is consolidating just above this demand zone. This tells us that the market is waiting for a catalyst before making its next major move. Instead of chasing the market, patience is the best strategy. If buyers successfully defend this support, and we see a strong bullish confirmation candle, gold could begin a fresh recovery. The first target would be the descending trend line, followed by the major resistance zone around 4,128 to 4,149. A successful breakout above that resistance would completely change the short-term market structure. In that case, bullish momentum could accelerate quickly, opening the door for a much larger rally toward higher levels. This move has the potential to deliver several hundred pips if buying pressure continues to build. On the other hand, traders should also stay prepared for the opposite scenario. If gold fails to hold above the current demand zone and closes decisively below 3,944, the bullish setup will weaken significantly. That would increase the probability of another bearish leg, with sellers likely targeting lower demand levels before any meaningful recovery takes place. So this is not the time to enter trades emotionally. The smartest approach is to let the market reveal its direction first. Wait for confirmation, manage your risk carefully, and avoid forcing entries in the middle of uncertainty. To summarize, support zone 3,965 to 3,944, resistance zone 4,128 to 4,149. Holding support keeps the bullish recovery alive. Breaking below support favors further downside. Breaking above resistance could trigger a strong bullish rally. The next 24 to 48 hours could be very important for gold traders. Keep this chart on your watch list and wait for price confirmation before making any trading decisions. If you found this analysis helpful, don't forget to like, subscribe, and share it with other traders. Thank you for listening, and I'll see you in the next market update. Okay, let's take a look at EUR/USD on the 2-hour chart. At the moment, the market is showing a healthy pullback after facing strong resistance around the 1.1470 to 1.1482 zone. Sellers are still active here, so a short-term dip is still possible. The key level I'm watching is the 1.1395 to 1.1388 support zone. This area also matches the rising trend line, making it a very important reaction point. If buyers step in here and hold the support, it could become the foundation for the next bullish move. In that case, EUR/USD may climb back toward the 1.1470 resistance, and if we get a clean breakout above that level, we could see even more upside in the coming sessions. On the other hand, if the support breaks with strong selling pressure, this bullish scenario will become invalid and the market could move lower before finding the next buying opportunity. So for now, the best approach is to stay patient, wait for confirmation, and let the market reveal its direction. That's my latest Euro to US dollar outlook. If you enjoyed this update, don't forget to like, subscribe, and I'll see you in the next market analysis. Now let's take a look at GBP to USD on the daily time frame. Right now, the market is approaching a very important technical area, and the next move could create a strong trading opportunity. As we can see on the chart, price is trading around 1.3450 after a strong bullish push. However, the market is still trading below a major descending trend line that has been respected for several months. This trend line continues to act as dynamic resistance, which means buyers still have work to do before confirming a larger bullish breakout. If GBP/USD continues moving higher, the first key resistance zone is between 1.3560 and 1.3600. This is a very important area because it combines both horizontal resistance and the descending trend line. Serious. Unless we see a strong daily candle closing above this zone, there is still a possibility that sellers step back into the market. If bearish pressure returns from resistance, we could see price gradually move lower toward the major support zone around 1.3200 to 1.3150. This support has already reacted several times in the past, making it an important level to watch for buyers. For now, the market is sitting between strong support and strong resistance. Serious. That means patience is the best strategy. Instead of chasing the current price, it's better to wait for confirmation before entering any trade. A confirmed breakout above the resistance zone could shift momentum in favor of the bulls and open the door for a much larger rally. On the other hand, if the market rejects this area once again, sellers may regain control and push the pair back toward the lower support levels. Excited. So keep a close eye on these two key zones. The next confirmed breakout or rejection will likely determine the next major direction for GBP/USD. If you found this analysis helpful, don't forget to like the video, subscribe to the channel,